Hey guys, welcome back to Financial Friday. Okay, you've probably heard this before. You should have 6 to 12 months of living expenses saved up in the bank. Where do most people put that money? Okay, usually it's in a savings account. Okay, maybe it's a high yield one earning maybe 3 to 4%, but there is a smarter play that most people don't know about. A properly structured whole life insurance policy. Let me give you a quick breakdown on why whole life is so freaking cool. Number one, your whole life policy grows tax-free. Okay, you do not pay taxes on any of the growth. Not while it's in there, not when you pull it out either. So it is true tax-free growth, period. Number two, guaranteed returns. Okay, your cash value, which is the portion of the death benefit that you can actually access while you're alive, grows at a 3 to 4% interest rate, just like your high yield savings, but it's locked in even in the bad markets, which is really awesome. Number three, you can access your money anytime. Unlike some of the traditional investments like IRAs, bonds, those things have penalties if you try to take your money out early, but this has pretty decent returns while being 100% accessible at any given time. So you can borrow against your cash value whenever you want to, no penalties. Fourth thing I love about it is it can really boost your ROIs when you are making investments. Now, when you borrow against your cash value, it still grows just like the money never left. Unlike a normal savings account, you take money out of the bank and now you're only earning interest on the remaining, obviously. Okay, but with the cash value, since you're borrowing against it, it all stays in there. So you're still making interest on the total amount. That nest egg that continues to snowball never diminishes, no matter how much you borrow against it, which is so cool. Now, what this means in real life is that you can borrow against your cash value to fund an investment that you're making, and then the return on that money is in two places. So let's say I take out $50,000 out of my whole life policy, or I borrow against my cash value. I invest it in a property where I'm making an ROI of 10%, and then the money that I borrowed against is making 3 to 4%. Now I'm making, with the same $50,000, I'm making 14% instead of 10%. Why would you not do that? It's freaking awesome. Another thing that's cool about whole life is that there's no mandatory payback. You don't want to pay back, that's totally fine. Obviously, we'll reduce your death benefit by that amount, but that's the same thing as if you were spending a savings account. If you have 100,000 in your savings and you pull 50 out, like if you don't put 50,000 back in to replenish it, you don't have access to that money anymore. And then another thing I love about it is that it gives you peace of mind. It builds generational wealth. While you're alive, it's a powerful savings tool. And when you're gone, it leaves a massive tax-free gift for your loved ones. It's just really nice to know that when you're gone, your family is going to be totally set financially.